In today's interest rate markets, we're going to focus on the 10-year note. Once again, the big mover of the day. We saw a significant move here. We saw prices lower, rates rising on the heels of the unemployment report. The unemployment report came out this morning, much stronger than expected, 312,000 non-farm payroll number. The expectations were about 185, so a much larger number. We saw revisions to the previous month's higher. We also saw the unemployment rate rise from 3.7 to 3.9. However, we saw the participation rate rise as well, and that's being discounted, and that's again why I think we're seeing this reaction in the 10-year note. Looking at other news items today that influence the rate environment, you had to look at the Fed. We did have Fed speak coming out after the announcement of the unemployment report. We had Fed chairman speaking, as well as former Fed chairmans Bernanke and Yellen as well. And the indication is that they're going to be a little more flexible moving forward. So again, the Fed appears to be in a position here where they're going to start to look at some of the other nuances in the market, not let alone just the data-dependent points that they were focused on. The dot plot might not be as significant moving forward. And once again, we're seeing that play out in the interest rate environment. I want to point out that we saw a range today in the 10-year note. 2.543 or 2.543 was the low end of the range coming into this morning. We saw a high of 2.673. So 13 basis point move from low to high, currently trading around the 2.66 level, so at the high end of the range. And when you look at the yield curve, I want to point this out, we saw basically the 2s and the 10s rise together. That spread remained about 16 basis points. That's where it's been trading for the last few days. So we saw both the 2s and the 10s rise. Now the 30 years actually did not rise as much, so we saw the back end of the curve flatten out, even with the front end of the curve moving up together today.